CloudWalk, a Brazilian payments company, is the first cryptocurrency company to get its license as a payments institution approved by the Brazilian Central Bank. Welcome to CryptoLink channel. If you love getting news and updates about cryptocurrency, join our community by subscribing to our channel. You can tap the bell icon to never miss our new videos. If you enjoy our channel, kindly like and share it with your friends. November 4, 2022. CoinDesk tweeted. Payments company CloudWalk is the first crypto firm to be authorized by the Central Bank of Brazil as a payments institution. The license will enable the company to connect directly with the government's payment system, Pix. At Olvaspalo reports. CloudWalk will be able to provide credit cards to customers and payment accounts to companies thanks to the license. Additionally, the business will now become the first cryptocurrency company to integrate directly with Pix, the 126 million user payment service used by the Brazilian government. Brazilian Digital Real or BRCL, a stablecoin developed by CloudWalk in December and connected to the Brazilian real, is being run on a private blockchain. The stablecoin currently functions as payback for transactions completed on CloudWalk's Infinite Pay, the point-of-sale system used by the firm. Partner and commercial director of CloudWalk, Pablo de Mello, stated, "We demonstrate our credibility as a firm by obtaining this license, which gives us the authority to function as virtual currency issuers and conduct financial transactions using our cryptocurrencies in our wallets." At a post-money valuation of $2.15 billion at the time, CloudWalk reportedly secured $150 million in a Series C financing round in November. November 2, 2022. Cointelegraph posted a tweet stating, "Can DeFi overtake TradFi institutions?" At BitGo CEO Mike Belch believes so. Reporting via @RachelWolf00. In 2021, the size of the worldwide decentralized finance market was estimated to be $11.78 billion. Although DeFi remains in its early stages, this amount is anticipated to rise as it develops. Many banks and conventional financial organizations are thus still ignorant of its potential. While this may be the case, experts in the cryptocurrency industry estimate that in the years to come, decentralized finance will surpass the role of traditional financial institutions. For instance, according to a co-founder and CEO of BitGo, a company that provides custody for digital assets, Mike Belch said to Cointelegraph that he anticipates DeFi to take on the role of institutions in the following 3 to 4 years. At Activate, developer conference of BitGo, which was held in Mountain View, California on October 25, Belch spoke into further detail about this concept. Here up the illustration of the interview between Cointelegraph and Mike Belch.
Do you believe DeFi will overtake institutions? Why?
On the basis of the cutting-edge use cases which we are beginning to see today, I believe DeFi will replace institutions. Automated market makers, or AMMs, for instance, have a lot of room for disruption. Market makers have been essential in ensuring that marketplaces and exchanges operate efficiently, but fast-moving markets like cryptocurrency can make it challenging for individuals to estimate asset prices. Additionally, traditional markets such as stock and commodity markets frequently exhibit this pattern. Market makers could believe that assets must be sold, for instance, if a market is in danger of falling, but doing so could cause prices to drop even more. In times of volatility, market makers also have a propensity to halt activities, which can be devastating. Market makers are furthermore subject to strict oversight from the Financial Industry Regulatory Authority and the United States Securities and Exchange Commission. Regulators spend several hours each day manually monitoring market makers. Market maker data may now be integrated into smart contracts through DeFi apps, eliminating the requirement for human brokers. Money makers, sometimes referred to as AMMs, can now be a piece of code which the FINRA or SEC can examine. Investors may also examine this code. Regulators are relieved of the responsibility of overseeing broker transactions, and investors benefit from higher asset prices. AMMs are not without their difficulties, such as DeFi application security risks and bugs in the code. However, we have reached a stage where computer programmers are striving to guarantee that smart contracts will have lesser issues and that code will be easier and safer to review. However, there are still issues with regulation and compliance. Considering this, it is currently too early for DeFi to replace traditional financial institutions, but I am confident that after 3 to 4 years of diligent work, the sector will undergo changes.
Is BitGo committed to enabling decentralized finance for institutions?
No, however, right now our attention is on the community of developers. Several new blockchains, for instance, intend to develop applications for gaming, DeFi, and non-fungible tokens. The BitGo development system is useful in this situation. In order for such apps to develop on top of BitGo, we want to ensure that the APIs we offer can seamlessly integrate with DeFi systems. This will speed up application development while exposing our clients to blockchain networks. DeFi-related functionalities for smart contracts are also being added by BitGo. For instance, blind transaction signing is now supported by MetaMask. The goal of BitGo is to develop transaction emulation to address this issue. Users will effectively be shown what will occur in detail prior to transactions taking place. This is crucial because DeFi won't take over institutions unless we figure out how to address the security issues the sector is now experiencing.
Do you believe cryptocurrency industries will eventually surpass traditional banks in light of this innovation?
I think software is transforming everything, including the financial services industry. Smaller companies will overtake banks if they don't consider how to utilize software to develop financial services. A dilemma for innovators, in my opinion, is being faced by Wall Street. They are aware that cryptocurrency is on the future and has the potential to cause disruption, but they also realize that it is still too early to have a significant influence at this moment. Wall Street isn't prepared to alter its corporate practices, but smaller crypto firms will continue to develop. Larger businesses will thus require significantly more time and won't be able to enter as quickly. Smaller firms typically outperform the big ones since this is what has been happening in the IT industry for decades. Large internet businesses are also showing interest in DeFi, but the banks remain uninvolved. As an illustration, Google Cloud is currently implementing crypto infrastructure. Banks will be at an even bigger disadvantage as a result of this.
To somewhat change the topic, you are enthusiastic about the approval of a spot-based Bitcoin exchange-traded fund. Why is this relevant for the cryptocurrency industry?
I believe that anybody who has suffered losses in the cryptocurrency market is increasingly to blame, along with the SEC. The sector would have a lot safer investing framework if the SEC approved a spot-based Bitcoin exchange-traded fund. This would let people to access the asset class via established, regulated, and supervised traditional enterprises. Instead, the SEC persists in denying this, leading to bankrupt exchanges and corrupt individuals.
And that's how the interview went between Cointelegraph and Mike Belch. That's it for our today's video. So, what can you say about the news? Let us know about it in the comments section down below. Thanks for tuning in to CryptoLink. We are always excited to provide you with news and updates about cryptocurrency, and if you like this video, please click the like button. See you on the next one.